Good afternoon. This is Julie. It is Wednesday, February 28th, last day of the month. The markets just sold off at the end of the day, big time. They tanked. Crude sold off because of the EIA report, but otherwise, I think the markets are getting a little bit nervous ahead of Powell's testimony tomorrow before the Senate panel, where he was a little bit too hawkish. I believe that they were used from what they were used to hearing, and they're trying to consider this fourth rate hike and value that into the market. So we'll have to have another Powell day tomorrow. But thank God we had today. Let's walk you through it from this morning. We had, early pre-market, the markets went up this trend line just beautifully. So every time you get back to the trend line, here's your opportunity to place these trades. And I've got a reversal bottom indicator that works really nice. So when you get back to your support resistances, you can elect to take these on that trend line change, or just put your indicator to your inflections long or high-low long or reversals long. But when you're on the bottom, either I guess the reversals long or that bottom indicator, and just some great trades off that trend line. Got up here to a triple top, got through the value area. Let me show you that value area on the fibs. Oops, where am I at here? I'm sorry, I've got the 3-minute chart up. I thought I was on the 15-minute. I'm like, where am I at? Here it is. I'm like, where did my fibs go? My apologies. Here is the double top. Um, the value area that I call it is that terrible place to trade in between the 38.2 and the 61.8 on your chart, and it's just no edge in that area. So you want to really wait every time it gets inside there until the price breaks out, and we'll show you which way to go. But this morning we had this very defined triple top action at that area, which made it very easy to see this neckline that I've pointed out. And so when you break the neckline, make this a little thicker so you can see it. There's that neckline. So when you break it, that sets up a fantastic trade, and it just raced to the intraday close. So there was your gap close. And so we took that in the room this morning, and then it bounced sideways, thinking, everything is fine and dandy. But look what happened. It went all the way back up. So some fantastic trading, some absolutely fantastic ranges. And then what does it do? After it goes all the way back up, it nosedives all the way back down in the afternoon. Check this trend out, guys. And if you can't tell me that these aren't fantastic trading opportunities, I got to tell you, I've never seen anything like this. This is just wonderful. So I never want this market to go back. And this is on a very high number, 816. Normally we take this like on a 612 or 714, but still, I mean, you just get more trade opportunities with a higher bar. Fantastic, fantastic trading. There's just no other way to say it. Just unbelievable. So tomorrow we've got Powell jawboning. Again, going to make it difficult to trade. We've got our ISM manufacturing report. They're expecting more growth. So I guess that would be negative for the markets. The markets are taking growth as negative. I don't know why they're pricing it in as negative. Growth is positive, the type of growth that we're having, spurring CapEx spending for the first time. So, but the markets are on their own. The strings have been cut. Clearly, we're able to get our up and downs like I've never seen the markets do before in the last, what, 8 years. So I'm just fantastic, fantastic swings up and down. Let's take a look at the high-low too. Um, and you can see how wonderful just taking these fibs were. You can go over to Daniel Rowe's website and register to get these Fibonacci indicators. And I've got the template set up already for you to trade these Fibonacci levels that you can take um, with this template. So that's all ready for you, up and downs. So when it comes in and crosses a fib zone, you can come in and grab these trades as they're triggered off. And this one is set up not to counter trend trade, but to trend trade. So it will wait for it to market to flip back around and then continue your pullback since it's really trend trading. But the trend changes so much, um, which is just fantastic, giving us all kinds of trading opportunities. So whether you're trading the high-low 2 or the high-low 1, um, it's just trade, trade, trade. It's like ding, 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 ding. Markets are open for business. I'm telling you what. Now, gold is going to be another thing to look at tomorrow. Um, we've got that GDP that sort of was flattish, and that was largely due on the trade deficit, kind of held that down. So once they get that trade deficit in line, I think that's going to make some of that GDP hotter. So if the markets don't like this, just wait as we get into the rest of the year as that growth picks up and the market continues to price in for interest rate hikes. And we'll see if we can get this turned back around to go back north. Growth is growth. That's what I don't understand about this. So take a look at our 60 minutes to see where we are. And we really still are in this uptrend. We just sort of flattened out, went back to our first line in the sand, really kind of broke through it though a little bit. Here's my second line in the sand. So, but just some fantastic ranges today. Here's the St. Mom trying to keep me short today on my momentum and trend. So I hope you had a good day. We had a great day. Tomorrow is going to be a little bit more difficult with the Fed chair speaking before the Senate. So glad that we got today in. So thank you so much. We'll tread carefully tomorrow and hope you have a good day too. Take care.